Hello and welcome to Markets Today. Well, if we look at the trading session during the US session yesterday, we continue to see US dollar weakness, and the dollar index has now sunk to 7-month lows at 96.53. Remember, the US dollar index is a value of the measure of the US dollar versus a basket of major currencies, and a weakening US data docket continued through trading yesterday. We had a host of ISM non-manufacturing data figures. PMI for services in the US also showed worse than expected figures and worse than previously reported also. So this has continued to weigh on the US dollar. Now remember, this past Friday we had the US non-farm payrolls report, which came in at 138,000. That figure was preceded by a quarter-on-quarter US GDP reading, which also came in at 1.7%, well below the Q4 reading of 2.1%. So overall, the US data docket is showing signs of cooling down as we approach the conclusion of quarter two. So this has really put pressure on the US dollar, and we can expect the consolidation in the US dollar index to continue in this channel between 96.5 and 97 levels. Looking at what's coming ahead, we have two very high risk events coming up in trading tomorrow. First will be the European central bank interest rate decision, and of course this will be coupled with the national British elections, which are going to have a result by the end of trading tomorrow. So if we start with the former, the European Central Bank, of course we've commented on this before. A lot of hawks are expecting to see more hawkish sentiment from ECB President Draghi, but all bets are off considering his comments last week, in which he said that the EU would still need extraordinary stimulus measures on hand in order to maintain the growth that we're experiencing in the EU. So we're not quite sure what impact this could have on the ECB's rate decision tomorrow. We're not expecting to see any major changes in the benchmark interest rates, and we don't expect to see any tapers to the current QE programs. But ECB President Draghi's comments will be very closely scrutinized, and it would be prudent to probably build Euro-USD positions only after his announcement tomorrow. Following that, we also have the British elections, which are due out tomorrow. The Tories hold, in the most recent polls, the Tories hold only a narrow 1% lead over the Labour going into tomorrow's elections, and you can expect heightened levels of volatility in all British pound crosses. And once again, it would be prudent to build your trading strategy only following the release of the outcome of that result. The pound has been trading in a very tight range in the lead up to tomorrow's election between 1.28 and 1.2950. Now remember, if PM Theresa May cannot garner a majority in the lower house during tomorrow's elections, then this could expose the door to sub 128 levels in GBP USD, and this could even open the door to maybe 1.25 levels in the weeks ahead. On the opposite side, if we do have a conclusive Tory victory, we could probably see a test of 1.3050 in the GBP USD in trading tomorrow. Having said this, guys, it probably prove very conservative to look at looking at building long positions in Euro GBP, considering these two high risk events. Once again, going long in the channel between 86.50 and 87. With an upside initial target of 0.88 followed by 0.9 may prove the best and safest trade in the next 1 or 2 months, considering these two high-risk events going forward. Guys, if you found this information helpful, please give it a like, please give it a share. Also, if you hadn't already have a chance to do it, definitely visit our new newsroom at equity.com. It's filled with very in-depth analysis and expands on a lot of the topics that we've discussed today. If you have any comments, please leave them in the comments below, and I'd love to address them for you.